Hi, I'm Roger Montgomery from the Montgomery Fund, and welcome to this week's Video Insight. Well, we're into reporting season now, and this year is an interesting one because I think so far, when we look at the very good quality companies, they can be best characterised as having produced mixed results. And I know that sounds really fence sitting, but in reality, the results are mixed. Let's go through a couple of examples. Credit Corp. Terrific result. You know, here at the blog over the last couple of years, we've alerted you to the tendency of the company to provide conservative guidance initially, then to upgrade in November, upgrade again in February, and then upgrade a third time in May. Well, they've done that again this time. So let's wait and see what happens in November and whether or not there's an upgrade. The next one worth looking at is Cochlear. Cochlear came out and I think they've got they're experiencing tough conditions in the United States, and what's interesting is many analysts are putting it down to a loss of market share that's permanent. I believe that we're going to find that the Nucleus 6 device will be enormously popular. We're already seeing internet inquiry for Cochlear's Nucleus 6 device significantly higher internet inquiry for that device than the Nucleus 5 device when it was released. And I think we're going to see them surprise and take back market share. But we'll wait and see see if that's correct. JB Hi-Fi came out with surprisingly strong results, and that wasn't expected. If we look at Domino's Pizza, I think, are suffering from increased competition in Australia and a maturing business, but they're going to try and offset that by rolling stores out in Europe. That's costing them more money, and they surprised the market with an acquisition in Japan, which I think they'll do good things with, but let's wait and see. Then there's car sales. Car sales absolutely astounded the market again. I can remember several years ago analysts saying that the company was mature, and here they are coming out with a net profit after tax upgrade of about 17%. Another one was Commonwealth Bank. Commonwealth Bank was interesting only because, yes, it was another record result, but what was interesting was the share price reaction. We've talked about that here at the blog already, but the fact that the share price went down tells us one thing and one thing only. It went down, we believe, because there was no special dividend, and that tells me that the market has been pursuing this stock for the sake of its dividend and with no regard to its intrinsic value. The stock is expensive at the moment. And finally, CSL, surprised with 26% earnings per share growth, but then a more conservative outlook statement. So I think so far the good companies, when we look at them, we can characterise the releases as being mixed at best, and we'll be interested to see what next week brings, and I hope you'll follow us next week as well. In the meantime, please make sure you follow us on Facebook and Twitter, because that's how you can stay up to date on a daily basis, and I'll see you next week.